Hello traders, welcome to my video on the Volume Supertrend AI indicator. I'm using the MetaTrader 4 MT4 platform. You can see the indicator here displayed on my chart. In this video, I'm going to show you how you can use this indicator with a simple trading strategy to capture moves like this one for over 400 pips. Okay, so this is a euro dollar 1 hour chart. I prefer the higher term chart time frame simply because they contain more price data, and therefore I find the trading signals tend to be much more reliable. So I like to trade the 1 hour, 4 hour, daily, weekly, and monthly charts. Don't see the need to stress yourself out. Trying to scalp a few pips here and there by day trading the 1 minute and 5 minute charts for a few pips here and there. I mean, when we can capture moves like this for hundreds of pips, by trading smart, not hard, I'm not sure why we wouldn't. Okay, that being said, the indicator, as I said, Volume Supertrend AI is displayed on the chart here. It basically gives you red lines when it suggests there's a downtrend and green lines when it suggests there's an uptrend. Okay. What I wouldn't do, first of all, is I wouldn't trade every time the line changes color. For example, in situations like this, you just end up getting whipsawed in and out of the market. Instead, I'm going to wait for a breakout and a trend to form clearly, which is what happens here. Okay, you can see that price came to this resistance area up here. Okay, and then we had a breakout of this support level. If I just zoom in for you. Price was consolidating within this channel. We had a triple top formation on this resistance level here. And then a nice breakout of the support to the downside. This was our signal that we were in a downtrend, and some traders may have taken this as an aggressive entry. The indicator was red, as you can see here, with a red arrow. So this could have been a potential entry earlier on into the downtrend. Otherwise, you could have waited for the pullback here and just entered on this breakout. M chart formation there, that support then becomes resistance, you get a continuation. If you're late to the party, you do get another opportunity here. There's a breakout there. That's an NFP non-farmers payroll first Friday of the month candle. We could have used the momentum there to get in on this down trend. Okay, so simple as that really. What we do is we identify a strong trend, and then we just time our entry on pullbacks and breakouts. Okay, so the money management aspect, when I'm taking a breakout trade, what I'm going to do is I'm going to place for a sell trade, I place stop loss just above a recent high. So you're looking around 20 to 25 pips on this particular breakout here. And as price falls, I'd move my stop loss to break even. And then I just move it above the highs as price continues to fall, locking in as much profit as possible. When we capture a big trend like this, we want to maximize the move. We don't want to see price drop here and panic, get excited, all 60 pips profit, let's just exit the trade and take what we can. You're just leaving way too much on the table. I don't use a fixed take profit because I prefer to take what the market will give me, and it's often a lot more. Okay, so tight stop loss, like to cut losing trades short, let winning trades run. That way, even if we do have consecutive losing trades, we know that we just need to catch one big trend like this and we can be up overall. Okay, if you do miss the first entry, you get other entry opportunities. Just make sure you time your entry well. Okay, look for lower highs in the market. You see there, lower highs. Okay, lower highs there, and then just trade on breakouts of support and resistance. Support in a downtrend, resistance in an uptrend. Okay, you don't want to sell too low either. If we zoom out and you see this move has happened, you might want to wait for a more significant pullback. Okay, but you can still, throughout this downtrend, you see just draw your support, breakout, support becomes resistance, entry opportunity there, same there, breakout. Okay, breakout there, and this indicator can just basically help keep you on the right side of the market. So when it's red, we're not going to look for buy trades. Clearly that the market is making lower highs all the way down, so we look to sell and just time our entry using breakouts. Another entry you can use is a pullback to this line. However, you will find it doesn't happen very often, which means if you're waiting for that, you're going to miss opportunities. And sometimes when it does happen like here, it could mean a turnaround of the trend. That would have actually been a decent entry there, as here the pullback to the line as well. But as I said, it won't always happen. However, you could, when price comes close, like it came close here, okay, You could look to sell there on the pullback rather than waiting for the breakout. And obviously keep an eye on candlestick formations as well, because they can just help give you that additional confirmation. Okay, like when you see a 3 inside down pattern, there is a bullish candle followed by 2 bearish candles that break below the low. Same there. Okay. Yeah, so we're good timing in the trend. We can capture moves such as this one for approaching 400 pips, the relatively tight stop loss. And then when you see a trend again, clear trend, we know we're in an overall, if we zoom out the bigger picture, we're quite in a strong downtrend. We did have this move upwards, but once we see this breach of this support line here, we're back on the downtrend again, and you can wait for your pullback, see how you break out, and then you can just draw your support level. See, that's a strong level of support. As I said, 1 hour chart, so there's plenty of price data included. Support, and a breakout there. Support, then comes resistance, and we're in on the trend. Okay, same again here. Don't want to buy too low, but that is an opportunity. M pattern formation, a breakout to the downside there, or the pullback entry where it came back and actually touched the line there. But as I said, there are instances like this pullback here where it will pull back but continue in the opposite direction. Hence why I prefer to trade the breakouts and also look for confirmation with price action analysis, although not mandatory. Okay, so that's one way to trade in a downtrend, and the uptrend's basically the same, just in opposite direction. So we stay out of trouble by only trading in the direction that the indicator is telling us. So in this instance, long when it's green, we know that anyway by just drawing our trend line. Higher lows in the market, we're in an uptrend. You can wait for a pullback and then just trade the breakout of resistance. Textbook breakout trade. There's a big breakout candle there, as you can see. No coincidence there. Traders are waiting for this to happen. It does happen. Nice uptrend. Breakout there. Pullback. Okay. Breakout there. Pullback. Breakout there. And again, you don't want to end up buying too high, just as you don't want to sell too low. Especially as you see price go on the other side of the indicator there. Tells you that the trend is perhaps changing direction. Even here, there was a clear, see this big move up here, pretty clear to spot. You can just draw your resistance there, and perhaps this wouldn't have been the best trade because the market turned around, but this is why I said money management is important, because if we've seen price move almost 50 pips, we could have easily put the stop loss at least break even, if not higher. And we would have just been taken out without a loss and could have looked to re-enter on this next opportunity up here, if not before, perhaps on this ledge that we see here, which is this support level. And actually the previous resistance, support, and then once it's breached again, you can see there's enough momentum to take the move upwards there. Okay, so plenty of pips to be made. You just need to time your entry. There will be losses. It's normal, but we cut our losing trade short. We know when we catch a big trend, we can make back those losses and then some more. But when you do see choppy markets like this, we know we can just avoid trading. I would anyway. If you're range trading, perhaps it's for you, but this is a trending indicator. Okay, so we're going to look for trending market conditions for this one. Okay, hopefully you found something useful in this video. I could actually see, nice downwards trend there, breakout there, simple trading. We won't always catch these home run moves like this one, but there's so many trading instruments and chart timeframes to choose from. We can be picky with our trades and just look for the ideal setup, such as this, when you see a big move down like that. Okay. Well, it kind of started around here. You had this bearish flag pattern. So a flagpole and a flag there. And again, flagpole, flag there, 2 bearish flags. And, this was a strong downwards trend. Okay, thanks for watching. Hopefully you found something useful in this video. If you can like and subscribe, that would be great and really help my channel. Don't forget, make sure you demo trade and practice your strategies as much as possible until you start to see some success. Have your trading emotions in check, something that's often overlooked by a lot of new traders. So fear, anger, greed. Don't let these cloud your trading decisions. Don't revenge trade. Don't get FOMO, fear of missing out. Don't overtrade. And yeah, have a trading plan and stick to it. And that way you can possibly get good results in the long term. Hope to catch you on the next one. Take care.